than this. So we'll get straight into it. First of all, if there are any new members, anyone who's maybe joined within the last week or so, if you put some ones in the chat, just so I can get an idea of who we have on the call. Okay. And if you're already using the Harmonic scanner source strategy, put some threes in the chat. Okay, so we've got a few threes as well. Okay. So for those of you who are brand new, first of all, I want to personally welcome you to our VTG family. It's great to have you on board. And it's great that you are looking to learn the scanner source strategy as well. Okay. So if you haven't already, you will want to refer back to the launch document under the FRX section, which talks about the steps that you want to take to understand the scanner source strategy. Now, the training that I'm going to do today, I'm going to do a bit of both basic and look at trades as well, just to make sure I'm catering to everyone. So first of all, just to find out, is there anyone that doesn't have the indicators set up on their Harmonic scanner? So put some fives if you haven't got the indicators or don't even know what I'm talking about when I say indicators. Okay. Okay, so we've got 1-5 at the moment. That's okay. So what I'm going to do is I'm going to do my best to go through the indicators as I'm doing the training as well. But I just want to make sure that I don't spend too much time on the indicators and then not enough time actually analyzing the charts. Now, the good thing about the indicators is I will try and go through the parameters in the session, but just to show you as well, if I just get this up, see if it will. Yeah, brilliant. Okay, just going to share my screen with you. Bear with me. Okay, so you should have the latest version of the launch document, which is version 9. If you haven't got it already, go back to your support leader or sponsor. You want to go into the FRX section. So there's a hyperlink there. Okay. And then if you scroll through, there should be strategies. Okay. So one of the strategies, you'll have the scanner source information. So as it says here, this is where you'll access the Harmonic scanner. You want to watch this video on how to use the Harmonic scanner to give you an overview of it. And then this video here on Go Live, it's going to show you how to add the indicators. Now, I will talk through it briefly, but I highly recommend going back through this video because first of all, it means you can pause the video and add the indicators on, and it will also give you more information about how the strategy itself actually works. Okay. So if you don't know about how the scanner source strategy already works, the first thing is the scanner source strategy is used on this tool called the Harmonic scanner. You've just got started and you don't know what the hell this is. Don't worry, that's what the education is there for. That's what the video is there. The videos are there for. And what the Harmonic scanner basically does is it scans the market and looks for potential reversals. So as a Forex trader, you always want to buy when the market is low and sell when the market is high. And so what the Harmonic scanner would do is either give you a buy or sell. So for example, this one here is a buy because the market has, from point C to point D, the market has been falling. Okay, so your blue candles are when the buyers are in control, the red candles are when the sellers are in control. And when it's got to the D point, the Harmonic scanner is telling us that we can potentially look for a buy to take this market back up. Okay, and the opposite would be a sell. So in this case, for example, from the C to the D, the market has been going up, and around the D area, the harmonic scanner is telling us that we can potentially look for a sell. Okay. Now, what the scanner source strategy does is it adds extra confirmations. Okay, because we don't want to just say, okay, it's telling us to enter around the green line, let's enter for sell, or on this pair, it's telling us to go for a buy around here, let's just go for a buy, because it's not always going to work that way. Sometimes the market will continue to go down. Sometimes the market may hang around before it actually does go up. And so the scanner source strategy gives us additional confirmations to tell us it's safe to enter this trade. Okay, now, are you going to win every trade? No, because like I said, the market will always do what it wants to do. But the more confirmations you have, the better probability and the better chance you have of winning the trade. Okay, so the first thing I'm going to do is load up my indicators, just to show you what the scanner source looks like once you've added the indicators on. Okay, so if I just go into my harmonic scanner and go to load chart, I've got my scanner source there, and I will talk about saving your charts after, and the video recording does go through that as well. Okay, so you'll see all these different lines that I've got on the chart. Again, don't be intimidated because I'm going to go through them. I'm going to explain them, but each section is giving you an additional confirmation that it's okay to get into that trade. Because like I said, you just don't want to go into the trade just straight away. You want to use the indicators to go into the trade. Okay, so one example I'm going to go for, and on the right hand side, if you're new, you may see M15, M30, H1. These are all your time frames. Okay, so M15 is 15-minute. And what this means is when you look at a candle, each candle, so your blue and red candles, it represents 15 minutes. Okay, so when we get to 45, and actually I can maybe add the countdown. So you can see that this candle, this blue one here, is going to close in 1 minute. Okay, so what I did there, I just right clicked and I went and ticked countdown to bar close. So that actually tells me when that candle is looking to close. So that candle is going to close in 15 minutes, in 1 minute, and then another candle is going to form. Underneath that, you've got your broker. So this is FX choice. You've got different brokers you can use. Different brokers have different prices. For this strategy, the top educator, Manny Quinones, recommends hot Forex. Okay. So you can switch to hot Forex. Okay. And what we recommend doing is using the H1 and the H4 timeframes, just because the higher the time frame, the truer the move. Okay, so the move may take a bit longer to happen, but typically when you have a higher time frame, there's higher chances of price moving in that direction. When you're on the 15-minute, because each candle represents 15 minutes, you're going to have a lot of up and down movements. Because think about it, in 1 hour, you're going to have 4 15-minute candles. Okay, so a lot can happen within that hour. Whereas if you have a 1 hour candle, you're waiting an hour for that candle to close, and it's less likely to have crazy movements. Okay, so just to kind of show you what the scanner source strategy looks like, I've got a photo here that I took off one of the groups. So you've got your scanner source indicator set up, okay, and you're looking for your confirmation. So hopefully you can see this clearly, but I'm going to explain each step anyway when I go through the harmonic scanner. Okay, so there's really 5 steps when it comes to or 5 confirmations you're looking for when it comes to the harmonic scanner source strategy. So the first confirmation is this DC channel. Now the DC channel you'll see is this blue line that's sticking to price and creating these kind of areas of at the bottom support, and the red one at the top is creating resistance. Okay, so your DC channel. So the first thing we want is we want price to hit the DC channel near the entry. Okay, so it's a bit faint, but your entry is this green line here, and we got our DC channel there, and we can see that price came down and touched the DC channel around the entry area. Okay, so that's the first step we're looking for. Our second step is we want these Haki-Nashi candles, and I'll explain more about this when we're looking at it. So you want a Haki-Nashi candle to close above the 4 McGinley, and your 4 McGinley is this line that's moving along with price, this blue one here. Okay, so you want a blue candle. We've got this yellow highlight here, which is signaling that was the first candle that closed above crossing the 4 McGinley. Now, when it's a buy, we want it to have a flat bottom. So the bottom of the candle should be flat for a buy. And when it's a sell, we want the top of the candle to be flat. Okay, and again, I'll go through some examples as well. Now, our third step is the stochastic. And for the stochastic, we want price, we want the two lines to cross, and for a buy we want the blue to be above the red, and for a sell we want the red to be above the blue. So in this example, we're looking at a buy, we're expecting price to go up, and they crossed here, and then the blue went above the red, which is what we want, and that shows that the buyers are in control. Okay, so whichever one is above the other shows whether the buyers or the sellers are in control. Our step 4 is the awesome oscillator. And for a buy, we want a blue bar. And for a sell, we want a red bar. Okay, so when we aligned everything here, we had a blue bar. And our last step is the DMI. So on the DMI, we want the blue above the red for a buy. Okay, and for a sell, we want the red above the blue. And we want this black line, the ADX, to be above the 40 level before we enter. And the reason why we want it to be above the 40 level is because this shows strong momentum in that direction. Okay, so if you enter earlier than the 40 level, the momentum could potentially change. So you could think it's going up for a buy and then it just reverses. Whereas when it's above the 40, there's stronger momentum in that direction. Okay, so those are the steps, and I'm going to be going through these. Again, the video recording on the launch document explains these, and you can pause it and look for each confirmation. And then what you want to do is practice on trades that have happened before, so you can look at real life examples. Okay. And I've just made it full screen, which I could have done earlier. Okay, brilliant. So what I'm going to do is, I think EuroCAD was a good example. I'm going to see if it lets me use this one. Okay, so I'm going to use EuroCAD on the 1 hour as an example. Now, when it comes to getting into these 1 hour trades, I would recommend looking on a smaller time frame for an earlier entry. Okay, now I've been looking at questions that people have had. There's a Harmonics Facebook group as well, and some people tend to experience price going in one direction and then reversing, for example. And this usually happens if you're entering the trade quite late. Okay, so you want to try to aim to enter the trade as early as possible. So for example, on the left-hand side, you will have your time frames for the candles. And here you're actually able to go into earlier time frames. Okay. So you've got 30-minute, for example. 30-minute is a good time frame to go into. And you've got the 15-minute as well. And if you're looking for really, really early entry, again, you have to be careful with the really low time frames, because they can give you really good entries, but it also can mean that the chart isn't exactly, or price isn't exactly ready to move in that direction. But you've got the 5 minute. And if you're looking for like a real sniper entry, you've got the 1 minute. Okay, so what I'm going to do is try and explore the different time frames to look at the the potential entries that you could have taken with Euro CAD, for example. So I'm going to start with the 15 minute. Okay, so I just need to get back to the beginning. Let's just see if it will take me there. Okay, perfect. Okay, so what I'm going to do is I'm going to go full screen on the chart. So I've just clicked on this icon there to go full screen. And I'm going to go through the confirmations that we need on here first. Okay, so step one was that we want price to bounce off the or touch the DC channel near the entry. Okay, so this one was pretty much textbook because we've got our DC channel literally right next to the entry, and price touched it and bounced off it. Okay, so we had a nice straight line from there. Okay, now if you're unsure about the DC channel, if you happen to have your harmonic scanner open, you can add this on now. If not, just make notes. So the DC channel is added by clicking on indicators. Okay, type in DON, which will give you on-chain channels. That's what DC stands for. And when you select it, you're going to get on the left-hand side, you're going to get something saying DC, and it may say a different number for you. Okay, you just want to click in the settings, change the length to 50. So the length is 50. Okay. And then for the style, we keep lower and upper run, take off the other two. And for lower, you want it to be blue because that's going to give you buys. And for upper, you want red, which is going to give you sells. Okay. Again, I'm not going to take too long on it because first of all, this video is being recorded and there's also the recording on the go live. Okay, so you can always add it on after. So our first step is we want price to bounce off the DC channel near the entry, which it did. Okay, so that's perfect. Our second step is we want a Haki Nashi candle crossing above, in this case, because it's a buy, we want it crossing above the 4 McGinley. And the 4 McGinley is this blue line here. Okay, so to add the 4 McGinley, we go into indicators, you type in McGinley. Now you can actually click on it 3 times because we've got 3 McGinleys on ours. So click on it 3 times and then you just go onto each one on the side. So the first one, we go into settings, the input is going to be 4 and the style can be blue, and you can change the thickness at the bottom. The next one is going to be input 20 and the last one's going to be input 50. 20 is black and my 50 is red. Okay, but you can always use a different color if you want. So we just want we're just interested in the 4 McGinley for now. So I'm going to actually hide the 20 and the 50 for now, just to take off the lines off the screen. Okay. Thank you. So we've got this candle here is crossing above the 4 McGinley, and we have a flat bottom. Okay, so if I wanted to highlight a candle for now, I would say that this candle here is potentially going to be my confirmation candle. Okay, but we need all of our other confirmations to line up first. So this is potentially going to be my confirmation candle. So what I'm going to do as well is I'm going to draw a vertical line on here. So I went into my tools on the right-hand side, my drawing tools there. So it would be trend line originally, draw my vertical line and then put it on there. And what I'm going to do is make this a bit gray, make it a bit thicker. Oh, there we go. Okay, so that's my vertical line there. So we've got our flat bottom So again, it has to be flat at the bottom because this shows momentum. This shows that the buyers are in control. Whenever the Hakinashi candle is flat, that means there's more momentum in that direction. Okay. So now I'm going to come off this, and just to mention Hakinashi candles. So by default, your harmonic scanner will be on the normal candles. So it will look like these candles here. Okay. But we just change. So if you go into the candles and you change to the Hakinashi, we change to these ones to show us momentum. Okay. Okay. So that shows us momentum. So what I'm going to do is come out of full screen and we're going to move on to step 3. Okay. So we've got our line there showing our potential confirmation candle. And I'm going to draw another vertical line onto my stochastic to look for a similar confirmation there as well. Okay. So on my stochastic, and I'm going to go into the settings.
I've not done no rice there.
Let me just make sure everyone's muted.
I haven't. Have you just?
Sorry. Just want to make sure everyone's muted. Okay. So on our stochastic, if I go to indicators at the top, you just want to type in STO and then you get stochastic. Click on it, you'll get something. It may look a bit similar, but you'll need to change the colors. Just click on the settings. Okay. Your inputs are going to be 14, 7, and 3. So just remember 14, 7, and 3. Again, make a note or just wait to watch the video. And your style is going to be blue, red, red, blue. Okay. And you can have a background if you want. Okay. But again, you can wait for the recording to go through the indicators. Now with the stochastic, what we're looking for is, first of all, we want, if we're looking for a buy, we want the blue to be, we want to cross over on the lines, and we want the blue to be above the red for buy and the red to be above the blue for sell. So I'm going to click on my maximize pane to make the stochastic full screen, and we can see where I aligned that candle. We've had our crossover, which is perfect, and we've now got the blue above the red. Okay, so we've got another confirmation of that. Okay, we've also got our lines at the bottom, which means this market has been more or less oversold, if you want to call it that, which means the sellers have taken it down and the buyers need to come back into control now. Okay, so as you can see, it crossed over and continued up, became overbought, and then was hovering around that area. Okay, so that's also another good confirmation that the buyers have room to take control. So that's our next confirmation. Now, step 4 is the awesome oscillator. So if I draw a line on the awesome oscillator, go into full screen, for a buy, we want a blue line, okay, which we've got here. And for a sell, we want a red line. Okay, so we've got our blue line, which is another confirmation. And then finally, on our DMI, and for the awesome oscillator, you literally just add it on. So you just search awesome oscillator, which is actually here. And then you go into the settings and you can change the colors. So I have color 0 as red and color 1 as blue, just to keep everything red and blue. And then lastly, you have your DMI, which shows you the momentum. Okay, so if I go into indicators, you just type in DMI, directional movement, select it, and then you can go into the settings, and your inputs are 5 and 1. Plus DI is your blue, because that's looking for buyers. Minus DI is red for your sellers. And then the ADX is black, which shows the momentum. Okay. So for our final step, we need the black line to be above the 40 in the same, on the same candle. So if I draw my vertical line, okay. Now you can try reading it by, putting your mouse on the black line and then looking to the right. So it's saying about 28 for me there. Okay, what I recommend doing is going into your drawing tools. You'll have a horizontal line. Put the horizontal line on your DMI. Okay, once you've clicked on the horizontal line, you should have your set tools at the top. So you can go into the settings bit on the wheel, and you can change the color if you want to make it a bit clearer. So I'm going to make this orange and make it thicker so you can see it. And I'm going to put my coordinates as 40. Okay, so what this does is it puts it on the 40 mark, so you don't have to try and guess where it is. Okay, so that's just a horizontal line. So we can see that at the orange, if I go full screen now, we can see at that mark there, the black line was below my orange line, which is the 40 mark. It touched the 40 line, it touched the 40 line here. So I'm going to move it to the right, because this is where it would have touched the 40 line. It didn't necessarily cross it, but it touched the 40 line. So this could have been a potential entry. Obviously, this one here, if I move the line here, would have been a much better entry to go for. Okay. So I'm just going to hypothesize and say, what if we went for this one when the candle closed and it had touched the 40 line? Okay. So I can see that I now need to move all of my confirmations one to the right, but you'll see that we still have everything confirmed. Blue there, blue above the red there. Okay. Now my confirmation candle is now going to be this one here. So let's have a look. I'm just going to move the black line to just double check it is a flat bottom. Okay, so we still got a flat bottom on this candle. And I'm going to delete that line. Okay, so we've got a flat bottom on this candle. Okay, so what you would do is when you're waiting for your confirmation, you would wait to see how many minutes are left in this candle. Now, again, because we're on the 15-minute chart, every 15 minutes, a candle is going to close. Okay, so if you looked at the time and it was 13 minutes past, you know in 2 minutes that candle's going to close, and you should be looking to enter that trade if all your confirmations continue to align. Okay. Now, I always like to put a box around my confirmation candle, because sometimes you may see the trade late, or you may want to enter at a better price. And I'll show you what I mean. So if you just you have a paintbrush tool here. If you go into the paintbrush tool and choose the rectangle, you can draw a rectangle like I have here. Okay, so you just draw it around the wick and the body of the candle. And when you do that, what you're telling yourself is anywhere within this yellow rectangle, I can enter. So if I came on the harmonic scanner and this happened at 12:30 p.m., but I missed the confirmation candle and I was looking at it at 1:15, as long as price is still in this rectangle, so once I've checked all my confirmations, I identified this was my confirmation candle. As long as price is still in this rectangle, I can still enter this trade. Okay, I can still enter this trade. So you either want to enter as soon as the candle closes, or because we always want to buy low and sell high, you can aim to enter halfway through this candle. Okay, so as you can see, when it comes to the Haki Nashi candles, they typically open halfway for the body of a candle. Okay, so you could have either just switched to the normal candles. Okay, so I've just switched to my normal candles. And if I look on my line, I can see that this candle closed, the body of it closed here. So my entry would have been when that candle closed there. Okay, or alternatively, not hollow, Haki Nashi. If I go back to my Haki Nashi candles, we'll see if this did retrace. Okay. So let's see. Okay. So let's just say I wanted to enter at halfway through this candle. If I just put a horizontal line, we'll keep it orange. Okay. If I go back to my normal candles now, okay, you would see that although we had our entry candle here, you'll see that price went up a bit and then it actually retraced and touched that line. Okay. So if you had got in up here, that's not a problem because, it may never come back and touch this line. But if you had got in where it touched the line, you would actually be getting in at a better entry, which if I use my ruler and just draw it from there to the body of that candle, it's about 3 pips. Okay, so you'd be getting a better entry. But as we know from trading, sometimes 2 to 3 pips can be the difference between you being stopped out and staying in the trade. Okay, so that's just something to consider, maybe a bit more advanced. If you're just starting out, enter when the candle closes. But if you want to try and look for that optimal entry, because again, we always want to buy low and sell high, think about it. Price has gone up. You're entering at the top of the box, whereas it may come back. It may even come back to the bottom of the box before going up. Okay. So that's our confirmation candle, and that's where we're looking to enter. Okay, so I'm going to put the entry at the actual close of that candle, because anyone that's starting out will most likely enter when the body of that candle closes. So that's my entry point. So in terms of identifying take profits and stop losses, as a rule of thumb, you always want to aim for 1-to-1 minimum. Okay. If you're doing multiple TPs, your TP1 can be 1-to-1. So if you're risking 10 pips, go for a 10 pip TP. If you're risking 20 pips, go to a 20 pip TP. Now, depending on where you enter this trade, so I've just gone to my measurement tools here. If we click on the arrow, you've got a long position and you've got a short position tool. So we're going to go for long position because we want to buy. I'm going to put my entry on the orange line because that's where you would have looked to enter. Okay. So let's talk about stop loss first. So your stop loss always needs to be outside of the box. First of all, that needs to be the first rule. Now, when it comes to this strategy, if everything has aligned, price should not come out of that box again. Okay, because when we're waiting for price to hit the 40 mark, that's telling us that momentum is in that direction. And so price should not be coming out of that box. If price comes out of the box, the trade is invalid. Maybe there's news, or maybe there's some kind of bank manipulation, but price should not be coming out of that box. And as you can see, this trade here was textbook because all our confirmations were aligned. And although we had a little bit of retracement, what happened? Price came out of the box and just continued to shoot up. That's what you want. This is a textbook trade. Okay. So for those of you who want to use a larger lot size, 10 pips would have been sufficient here because it's outside the box. Again, if it stops you out, you've risked 1, 2, or 3%, but you were looking to gain a lot more. Okay. If you want to be a bit more conservative, you can put your stop loss underneath the Don chain channel, because once again, when price touches the Don chain channel, it should spring off and it shouldn't come back below. Again, if it does, it just means that trade was invalid. So you could have gone for a 15 pip stop loss or a 20 pip stop loss in this scenario. Okay, both of them are underneath the Don chain channel. So those are the kind of things you want to consider when you're putting your stop loss, either outside the box if you want to be a bit riskier, use a larger lot size, or below the Don chain channel to be safe. Okay. So let's say we did the box because again, we had all our confirmations there. If it stopped us out, we're only risking 3% max. Your first take profit, so we can see this is about 10 pips. So you ignore the last number. Your first take profit will be 10 pips. So just above the TP1 line, which it did. Okay. And then for your other take profits, it's really up to you where you want to go, whether it's TP2 or you want to ride it out to TP3. Okay. If you're taking it to TP3, because again, the better the risk to reward, the less trades you actually have to win. So if you're taking it to TP3, this would have been a 1 to 4, nearly 1 to 4.5. So if you're risking 1% of your account, you'd be looking to gain 4.5%. Okay, just going to check the questions and then I'll go through this again. How big is the box? As in the one I drew over, the yellow box needs to be the size of the body and wick of your confirmation candle. So if I just go back to my Haki Nashi candles, so you want to do it with your Haki Nashi candle, and you can usually do it whilst the candle is closing. So just before the candle's going to close, as long as it stays a flat bottom, you would draw it above the wick. So you would draw it up from the wick to the body of it. And I just like to extend it out for demonstration purposes in case you're looking to enter later. Okay. So for example, if you are if you're an hour late to the trade, but you spotted your confirmation candle beforehand and you extend it out and you're say on this blue candle here, you know that as long as this candle is in that yellow box, I can still get in for a buy. Okay, that's why I always like to extend it out, because you can see this candle here, that candle there, that candle there, that candle there, and even this one, if on the normal candles it was inside that box, you can still enter the trade. Okay, so we can see we had potentially 1, 2, 3 candles, and if you had saw this one when it was opening at the bottom, you could have still entered the trade for a buy. Okay, how do we enter the trade using a 1 hour time frame? So if you want to enter the trade using the 1 hour time frame, what I'll do is I'll come back to that one, because you can still enter it on the 1 hour. Ideally, going into a smaller time frame is the best. And the reason why I say it's the best is because the earlier you can enter next to the entry zone, next to the Donchian channels, the better chance you've got of winning the trade. The higher or the closer to the TP, or the further away it is from the entry, the more the bigger your stop loss is going to have to be, and the more risky it's going to be, because the move may have already happened, if that makes sense. Okay, and I'll show you what I mean as well once I've gone through this trade. Okay, so for example, if I just double click in this tool and show you, if you had an account with say 1,000 in it, okay, and let's say you risked 3%. Okay, so this one trade alone, if the trade had hit your stop loss, okay, your account would go from 1,000 to 970, because 3% of 1,000 is 970. So you'd have lost £30 or $30. Okay, but if you win the trade, your account has gone from 1,000 to 1,134. Okay, so you're risking £30 or $30 to make £134 or dollars. If this was £100 account, you're risking £3 or $3 to make £13 on your account. Now that's an excellent risk to reward, because it means even if you lose the next 2, your account is still up. And that's why you want to aim for excellent or good, risk to reward. Okay. So hopefully this is all making sense to you so far. Check the trade on the lower time frame and set the trade on the 1 hour on MT4. Okay. So check the trade on lower time frame and set the trade on the 1 hour on MT4. Yeah, so for example, this is a 15-minute example. Before I go on to the 1 hour, I just want to talk about multiple entries, okay? Because the great thing about this scanner source strategy is even if you miss the first entry, there's 2 other entries you can look for. So the first type of entry, if I just switch back to my Haki-Nashi candles, the first entry is the one that we spoke about, okay? You've got everything aligning and you've got your Haki-Nashi crossing and closing above the 4 McGinley. Your second entry is if I put on my 20, which is the black line, your second opportunity to enter is when the 4 McGinley and the 20 cross. So this black line and this blue line cross, this is your second opportunity to enter. Okay, so all you would do is make sure all your confirmations align again, and you would then look to enter the trade. So I want a flat bottom Haki-Nashi. So you'll see we had a wick. We had one with a tiny wick. It's very small, but it had a tiny wick. Okay, so what I'm going to do is let me get rid of that. So our 4 and 20 crossed here. We had 2 candles with wicks, but then we had a candle here with a flat bottom. Okay, you will notice that everything aligns, blue above the red. This one's a bit riskier because it's now at the top, but again, we're looking for a second entry, and we can see the black line is clearly above the 40 and the blue is above the red. So this would have been a potential second entry. So once again, you would have lined, you would have put your rectangle, okay? You could have waited for the retracement because again, if I put a rectangle here, okay, so we're actually looking at this flat bottom candle here, okay? You can see that there was a retracement, but none of the candles closed. If I just put that properly, I mean, we could maybe say this candle closed below it. It did, you know, spike out. So again, this is why you don't want to have too much of a tight stop loss. But again, anywhere in here would have taken you upwards. Okay, so that's your second entry. You would just look for all your confirmations to, could you take it with a small wick? So I wouldn't recommend taking it with a small wick, just because Manny recommends flat bottom for momentum. Okay, so if you kind of go against some of the confirmations, the trade is going to be risky. You might win it, but what you want to do to be disciplined is you always want to only take trades when you have all the confirmations. Okay, because you may win it, but then once you start taking those riskier ones, you start taking more riskier ones, and then you stop looking for all the confirmations and so on. So you want to kind of stick with that, because trading is all about having a set of rules and you just stick to those rules. And as long as all your confirmations are there, you take the trade regardless. Okay. So that's your second entry when the 4 and the 20 cross. Now there's a third entry as well. Okay. So if I put my 50 back on, when the 4 and the 50 cross, that's another confirmation that you can enter the trade. So if I just put this on this candle, so that is our confirmation candle for our second entry. And you can see the 4 and the 50 crossed here. So my blue and my red line crossed here. We had a flat bottom confirmation candle. Now, again, this one's a bit trickier because we're at the top here. So what I'm going to do is draw a line and see whether the blue was above the red on the stochastic. Okay, so this one was a bit trickier, but we can see we had another cross here, and then the blue went above the red here. Okay, so you would have wanted to enter this trade on this candle here, this Haki-Nashi candle here. Okay, now again, because TP3 is very close, and this pretty much crossed above TP3, you wouldn't necessarily want to enter this trade. But if I just go back into my normal candles, I just want to see how many pips it was for that candle. Okay, I mean, if you had left it to ride, you can see it did continue to shoot up. Okay, But you can see on this candle here, we went up a few pips and then it retraced. So you wouldn't necessarily want to be entering when we've already surpassed TP3, because TP3 is signaling an area of structure. So we can see we've got a resistance here, we've got a resistance there. What did price do? It came up, it broke a bit, but then it resisted. Okay, but those are your different entries that you can look for. And again, I've got a picture here that talks. What I will do is I will post these in the chat so you can save them in the Discord chat. So we've got entry 1, entry 2, and entry 3. Okay, and it's showing you where the alignments are. Okay, so that's a bit more advanced. Once you're comfortable with taking the first entries, you can look to do your second entries. Okay, so if we look at the 1 hour, now this is where taking the trade on the 1 hour gets tricky, because unless there's a lot of room between entry and take profit 1, you may find that you don't get an opportunity to enter this trade straight away. Okay, so if I just get rid of my lines, okay, we can see that on the 1 hour, we had our first flat bottom Haki-Nashi candle here. Okay, but the issue is this flat bottom Haki-Nashi candle, first of all, it's already crossed TP1. Okay, so we're already, going, potentially it could reverse. I mean, it was very strong because, as I always say, the higher the time frame, the stronger the trend. Okay, we didn't have our blue above the red there, so we would have had to move to this candle where we did have the blue above the red. We then had a switch from red to blue on the awesome oscillator, so that's a really good confirmation. And then on the DMI, we haven't got the black above the orange, or black above the 40 until this one here. Okay, so we would have been very late to the party on this trade if you had taken it on the actual 1 hour candle. And that's why it's so important to go onto a lower, whether it's the 30-minute or the 15-minute, to look for another entry. But the thing is, what do you see here as well? The 4 and the 20 have crossed, which is then giving you another valid confirmation for another entry. Okay, so you could have entered in this area. The only issue is you're potentially looking to create a big stop loss for yourself. Okay, so I've literally put my body and wick in this yellow bar. If I change to the normal candles, okay, we can see that this candle, closed right at the top of the rectangle. There was a retracement, so you could have maybe aimed to get in around that area there. But even if I say we got in around that area, our stop loss is going to be, okay, it's not too bad. So your stop loss could have been about 25 or 30 pips. Okay, so if I just go into this to make it full screen, and then you could have aimed for 30 pips here. Okay, so as long as you had gotten, near halfway, you could have done a 30 pip stop loss. If you'd got in right at the top of the box, as soon as that 1 hour candle closed, you would have had to do like a 45 or 50 pip stop loss, which means you're going to have to use a really small, a smaller lot size, should I say. Okay, so just bear that in mind when you're getting into the trade. If you can get a lower entry price for a buy, always try and go for the lower entry. If you get a higher price for the sell, always try to go for a higher entry. Okay, so that's how the ones look when you're just entering at later times. Why is there a blue arrow below the blue candles? Is that an indicator? How do you measure your TP in that example? So I would have gone for 1-to-1 first. So if I'm doing 30 pips, a 30 pip TP, and then I would have zoomed out and looked for the next area of structure. So either this resistance that we have above here, or maybe this resistance up there. would have been my next TP. Okay, because we can see with this one, we had a resistance there, we had a resistance there and a resistance there as well. Okay. I think was there another question? Let me just double check that, another question. Okay, so the blue arrows, brilliant, great question. So the blue arrows is something called the super trend. Okay, so to get that on, just go in your indicators, type in super trend, and then you'll get this super trend here. Click on the settings option, and you've got an up arrow and a down arrow. I always take the super trend bit off for the style. I've got my up arrow as a triangle. It will be arrow up by default, but the arrow up doesn't look that great, so I prefer the triangles. So you can have an up triangle for up and a down triangle for down. Your inputs is 1 and 1. And what these triangles are supposed to do is show you the trend of the market. Okay, so we can see near the entry, this 1 hour candle closed with an arrow above it. Okay, now would I recommend entering the trade just because you got an up arrow? No, I want all my confirmations there. So if I go back to the Haki Nashi and go back to the 15-minute, okay, we would have seen that before we had the buy. Okay, so you can see my 1 hour buy was in this area here, whereas we had a confirmation to enter. The best confirmation was, so we had this potential confirmation here, or if you wanted to be safe, this one above the 40 with a flat bottom there. Okay. So you can see that with the 15-minute, you would have entered a few candles before, which would have mean you would have been in profit before the 1 hour activated. But you can see with my super trend indicator, I had an up arrow from near the entry. Okay, so it confirmed the buy, and there weren't any down arrows at all saying that it's going to be a sell until we got up here. Okay, so it's just an added confirmation to tell you that the trend is going in that direction. So ideally, if you get one of these arrows before you get your confirmation candle, that can also be a really good signal. Okay, so before I wrap up, I just want to, now I haven't checked this or tried this yet, but I just want to talk about early entries and potential sniper entries by going into the lower time frames. So again, is this always going to work? No, because the lower the time frame, the higher the movement. But what I want to do is just say, for example, let's say this was our 15-minute confirmation candle. Whoops. Okay. This was our 15-minute candle. I just want to experiment and see what would happen if we looked for a 1-minute entry on this trade. Okay. So again, there's going to be a lot more candles and a lot more lines. But I just want to see if we would have been able to spot a very early entry into this trade and how many pips we would have been able to catch. So because I'm on the 1 minute, you can see that we've got a lot of, let me see if I can zoom out more. Hopefully I should be getting closer to the entry now. Yeah. Okay. So maybe it wasn't the best idea. Is it not letting me go left anymore? I think I may have crashed my harmonic scanner there. Okay. So maybe I should stick with the 5 minute, but it's probably because a lot of movement has happened since then. If this was obviously a trade called on the harmonic scanner straight away and you put in 1 minute, you'd have a lot less candles than I've got here. Okay, so we can see from the 1 minute that our entry Now, actually, I don't know if that's still the most up-to-date one, so I'll look at that later. But if we go on the 1 minute and we look for a potential entry into this trade, okay? So again, we would have still wanted the Haki Nashi to bounce off the Donchain channel, okay? We can see that we had our up arrow on this candle here, okay? We can see that we had a cross here, okay? So I'm going to draw all my confirmations. Now, this trade would have probably driven you crazy because there's a lot of consolidation and it did retrace. So we've got all our confirmations lining up on this candle here, okay? So this is like one of the first earliest blue candles on the 1 minute chart. Again, if I draw my confirmation candle, okay, so this is where we can enter. So again, you've got tons of entry opportunities. So if I switch back to, if I just say we looked to enter halfway on that candle there, just to get a better entry. Okay, so I'm entering halfway on that candle there. Okay. So I'm just going to try and go back. Again, apologies if this is painful to watch. I just want to see what would happen if you entered that on the 1 minute. Let's see. Yeah. Okay. See if there's arrows. Actually, it's not going to move that much. Let's go like that. Okay. So yeah, we'll wrap it up after this example. Let's see. Still can't. Okay, there's my TPs. I was just looking for my TPs. Okay. Okay, so maybe the 5 minute would be better, but obviously on the 1 minute, you're going for a sniper entry. Again, you would ideally do this when the trade has been called out so that you don't have all of this to kind of go through. Okay, so I've changed to my normal candle. So you can see on the 1 minute, we had this blue candle going up. So if you had entered, you'd have been on the top of the rectangle. But again, if you had waited for halfway, you can see that it would have tapped our entry. It even retraced. Now, I wouldn't have put my stop loss there because this is actually nearly a 2 pip stop loss. So in this case, because your entry is so close, because your entry line is so close, a 5 pip stop loss would have been here. Okay. And we can see it didn't touch stop loss. A 10 pip stop loss would have been here. Okay. So even if you wanted to be extra cautious, a 10 pip stop loss would have been down there. Okay. Now, if you had wanted to go for a 1-to-1, a 10 pip stop loss, a 10 pip TP would have been around there. Okay. So you would have been, you would have hit TP well early because you can see, although it retraced a bit, it went up to hit, TP around this area here. Okay. So the trade started about 11:12 in the morning UK time. You would have hit TP1 by about 12:30. Okay. So imagine if you had entered on the 1 minute and taken it all free. So again, I'm having to make this really tiny because it's So big. Okay, so this would have been, it's not much different from the minute to be, but it would have been a 1 to 5.4 risk to reward. Okay, if you had given it the 10 pip stop loss, if you had given it the 5, because 5 was still a big area for a stop loss on a 1 minute trade, it would have been a 1 to 10, pretty much a 1 to 10 risk to reward. So again, risking £30 to gain, if I go to TP3 and move it up a bit, to gain £313. Okay, so that's on a 1 minute trade. Again, is it always going to work? But remember, if you want a 1 to 10 risk to reward trade, risking say 1%, right? You would make 10% on your account, and you would have to lose about 6 or 7. You would have to lose 7 or 8 or even 9 trades to break even. Okay, so that's why risk to reward is important. So that was just an example of how the smaller time frames can give you a sniper entry. Again, you want to make sure that it's close to the entry as possible, just so there isn't a lot of room for retracement, because the market's always going to be moving in waves. And that's why you may find that sometimes you enter and straight away it just retraces, because you may be entering at the top of that wave, whereas you might want to wait for it to retrace and then you enter once the retracement has happened. Okay, so I'm going to leave it there. If you've got any questions, feel free to type them in the chat now. Do you have to enter your time frame in MT4 as the price is always the same when executing the trade? So what you want to do is when you use your measurement tool, you want to enter the trade with your lot size, and then you can come back on your measurement tool and double click inside it, and you can actually enter your entry from MT4 and then work out your stop loss and take profit from there. So for example, if you're doing a 20 pip stop loss, we always ignore the last digit. So a 20 pip take profit would be 200 in this case, and a 20 pip stop loss would be 200. Okay, and by putting in your entry, it will tell you when you put in your stop loss, the ticks, it will tell you what your profit and your TP is. So you can put it exactly in that sense. Okay, so hopefully that answers your question around the time frame. So you want to put in, yeah, you want to enter with the lot size. So you work out what your stop loss is going to be already, know your lot size, and then once you've entered the trade, you can come back and use the measurement tool to put your exact entry and TP and stop loss. Okay, because it's always going to be a bit different depending on the broker. Okay. So hopefully that answers that. Oh, in MetaTrader 4. So in MetaTrader 4, the time frames are only on the chart. So do you have to enter your time frame in MetaTrader 4 as the price is always the same when executing? So on the charts, you can have it on any time frame you want. Because like you said, the price is always going to be the same. So you can have it on any time frame you want. Obviously, a 1 minute is just going to show you exactly where price is at that particular moment and what candle it is. So your measurement tool is underneath this diagram here. Is this one here. So if you click on the arrow, you've got your long position, you've got your short position. So I did long position, then I clicked on the area I want to enter. And then if you just double click inside it, so on the green or the red, you can then put your account balance, your risk percentage. That will tell you how much you gain, you look to risk and how much you're going to gain if you win the trade. And then you just put your entry, and then you can put in your take profit and your stop loss. And the ticks is just the pips, but you always ignore the last number. So this is 20 pips, that's 20 pips. And then it tells you what your entry and so your profit and your stop loss prices should be, so you can then just enter those into your MT4. Okay. Brilliant. Okay, you're welcome. Perfect. Yes, you have to enter the time frame on MT4. Okay. So, oh, brilliant. So if there aren't any questions, we'll leave it there. Once the recording is uploaded on Zoom, I will put it on YouTube and then share it in the chat. I also share those pictures as well of the confirmations and the entries. And then again, just go back and back test, because that's what I'm doing in these sessions. This trade happened on Monday, I believe, this Euro CAD one. So we've used that one on Monday as an example. Go back, look for your confirmations, look where you would have entered, look where you'd have put your stop loss, see, would you have won the trade? Would you have lost it? Why would you have won it? Why would you have lost it? Is there anything you can change? Do you need to use a bigger TP? Do you need to enter at a certain position instead? And that will allow you to become a better trader and better at using the strategy. Okay, brilliant. So we'll leave it there. If you got any questions, post them in the Discord chat. Either myself or Lakeisha or someone else in the group who's using the strategy will answer. You can also DM us as well if you don't get an answer over a period of time. Sometimes there may be loads of messages, and so messages may get drowned out. But you can always reach out to us as well, because we're here to support you. And all post your charts, your markups as well, so that you can so that we can give you analysis and that sort of thing as well. So I'm on YouTube, but all my videos are unlisted. So what I would do is when I share the next video recording, you'll be able to see my channel, but all the videos are unlisted because they're just for our team. So even if you search for me on there, you won't actually see the videos unless you're getting the link straight away. Okay. Perfect. So we'll leave it there. But have a wonderful evening or afternoon wherever you're tuned into this training from. And yeah, we'll catch up again next week. And don't forget, Lakeisha has got her sessions on Tuesdays as well, 7:30, 5-figure trader. So you definitely want to plug in as well. Okay, brilliant. All right, everyone, take care, and I will speak to you all next week. Oh, thank you.